Now, here's what I want to do. I'm going to make this simple because on that chart, the S&P is the bold white line, but it gets a little bit lost in there. So let's go back to this big chart, and let's go back to the S&P 500. And now, if you're looking at this chart, there's things going on it that you want to know about, and I call them pivot points. And that's probably not the most technical use of the term pivot points, but the market pivots at 2 points. It pivots, first of all, at a low, and then it pivots at a high. The problem is we don't know that it's the low or the high.
Yeah.
Because as I learned from you, that the one part of this chart that nobody really ever answers in your class, who can tell you what's going to happen right here?
That's right. And that's the only place we get to make money.
Right. So when we look at this, as far as the chart's concerned, I'm looking at that if, on this particular chart here, as we record this bar right here is the low. That happens to be 9/26 on the date. So I can come back to my chart here. I can come back to 9/26, which should equate to that low, which it does. And I can now move this back to September the 26th, which is right there. And from that low, which was 1, 2, 3, 4, 5 days ago, I can now look at what's going on relative to the S&P 500.
And Jim, you talked about how visual these things are. I think on this chart particularly, you can see that. This brown line here, which is, I believe, XLV, which is healthcare. One of the things that you can see with this particular form of a graph is acceleration. And you can see this thing crossing up through the other sectors, and you can see it's accelerating out of this low that you found back here a few days ago. It's just shooting out of that, and then you can see others that are moving down very rapidly. You can see not only where money's going, but how fast the money is going there.
And that, to me, that's what this is about. This, in other words, think about how much time and reading you have to do in order to figure out what's accelerating. Like today, because the day we're recording this, that white line is energy, and energy obviously did not have a good day, but that's because oil supplies were too, we saw them too high, meaning oversupply of oil, so crude broke below $90 support levels, so you can see that. Now, today, we justify and understand that line. The challenge is that going to continue? So in other words, you can now create your own pivot point in energy. And that is, if we went back as an example to this and we wanted to build on this chart an energy with the 10 largest stocks inside of XLE, we could do that.
Absolutely.
And we could see who's the biggest losers. And what you would find today, the biggest losers are going to generally be the large cap stocks like ExxonMobil, ConocoPhillips. You're going to see those as the losers. But you can see them very simply. And I want to do that, but I don't want to lose our train of thought here on what we're looking at. And so we've got the pivot point being, we thought this was a low. So now it's going to validate whether it is or is not going forward. So far for 5 days, it has validated that is a low pivot point. And as you go through this, you can find what accelerated on the first day through here, the second day, third day, fourth day, fifth day. So you can actually look at what's going, and you can start to develop your own what I want to buy, my own belief window. And because for the recording, to save time on this, I've already gone back and looked at a lot of this stuff. XLV, which you brought up so astutely, seeing that line accelerating to the upside. Why is XLV moving up? Well, let's go back to the chart, and we'll just put this story in perspective. The reason it's going up is, one, we're headed into the election. As we go into the election, Obama's leading by 4 to 5% in the major polls. That protects healthcare. If you go back and you look at IHF, just because I know that that's the healthcare providers ETF, I can see that as Obama started to pick up in the polls, so did the healthcare providers. But they pulled back, they consolidated, they tested, they broke out, and they're accelerating again.
And isn't that because they're the ones that will benefit the most from a continuation of what's called
They're going to get 30 million more people paid for by the government. So they have guaranteed payment, which before they didn't.
But you know what's interesting to me, Jim, is that story, the backstory. But that backstory plays out on the chart that we looked at even if they don't know, even if a user doesn't know that backstory, they can look at that chart like I did and say, wow, that line is going up really fast. Something's happening.
Well, and what's important there is I'm just going to give a trade secret of one thing that I do all the time. And here's how you get to the stories.
Okay.
This is the simplest way I know how to get to the story.
So let's say they're looking at that chart. They see that brown line going up and they go, wow, healthcare is going through the roof. What's the backstory? This is how they go get the backstory.
So
right?
Yeah, exactly. So you go to finance and
you're on a different computer.
why can I not see? How do we get cap locks off there?
And it's impossible.
We're going to kill Donnie. That's what we're going to do. You just type in finance.yahoo.com, and when you go in here, you just go to symbol, and you type in XLV, because that's the symbol that's leading it. And you can see that what it's going to bring up is all the headlines underneath here of what's going on with healthcare. So you can start popping into headlines and seeing what's driving this. And then if you've got, remember I said if you build a watch list of the sub-sectors of these major industry groups, like with healthcare, one of them would be IHF, which is the healthcare providers. Then you could actually come up and type in, if you went to your sort list, do custom date sort based on the same time frame, guess which one comes up on top?
Right.
So you would see IHF. You could come back over here and type in IHF, and all your stories about the healthcare providers are going to come up at the bottom.
So a little bit of homework would be for people to build watch lists on those 10 major sectors of the S&P 500. Go into that and look for the component or the ETFs that make up that sector.
Right.
If they do that little bit of homework, they've got the 10 major sectors. Now they've got the component ETFs that represent those subsectors. Just with those 10 watch lists, they've got a lot of the market in their hands.
Exactly. And then, think about it. This is why I get excited about it, because it really is simple. We've made this way too hard. And the simplicity of that is that if we go back to the scatter graph and we look at this, the date that healthcare moved was right here. So we could do a custom date sort on that 3 or 4 day period. Then we could pull up our watch list of all the healthcare, put that custom date sort onto there, and it will tell you who's leading of all those ETFs.
Sure.
And that, to me, that just brings the market down to a simple trading format.
Right.
And when you start to break it down simply, the market really does come to life. And I'm stealing from GE, but But you can see right here, radical healthcare changes. You can see what starts to come up is healthcare changing face of healthcare insurance. You start getting these articles that backfill why you're seeing the chart move.
Yeah.
And that, to me, is very simple way to look at the market. And the same is true right now. If we go back over here, one of the things that you would find if you were looking at this of late, XPH, which is the Spider's pharmaceutical subsector, has not done well. You can see that it's really struggled. Why? The drug program as part of the Obamacare is not really clear. And so that people are wondering, are these companies going to be able to pass on the higher prices? Is government going to step in and mandate price controls? So what you're seeing is opportunities within this. But if that's true and they're going to do it, guess which one of these things starts to come up? You know it. I got the wrong symbol. Express Scripts. Why? They're the largest drug provider. They bought up. They bought up all these companies. They just got bought out by one of the major distributors. With CVS starting to come in, and so what's happening is this is going to become a big conduit out there for how you got all this delivery system, which you can still find the winners. Yeah. Now, of course, you and I pull this up on the day that it breaks out, but. You bought that earlier, didn't you?
I wish.
So, the key to me is that the scans need to make sense. I talk to people all the time, and I know you do, that scan for the sake of scanning. That doesn't make any sense to me. The last part of this that I wrote down is simply on purpose. I'm doing this to make money.
Right.
I'm doing this to build wealth over time, and that's why I want it to be easy for me to stay on purpose and focus on what I'm doing instead of just doing it for the sake of doing it.
You're talking about the ease of research, and there is so much information out there. I mean, IntelliChart alone, we cover 60,000 plus symbols. That's a big market. So how do you know what to look for? Well, when you see a graph like this and you see a sector like XLV shooting up, healthcare is doing something. That focuses your research. Simple research based on the fact that, well, that's the sector that's going nuts right now. Let's go find out what's going on in that. It focuses your research becomes a micro view rather than a macro view, and it narrows this massive market down.
And absolutely, and you look at what happened off of that same pivot point. Is look at what financials did. The green line.
Mm-hmm.
You can see that they started to accelerate. And people have been negative on financials, which I don't understand because the fundamentals of financials are working,
mm-hmm.
but you see they accelerate. At the same time, you see a deceleration in basic materials, and you see that one of my favorites right now is utilities, and we've been tracking utilities for a while, but you see that big acceleration in the last 2 days of that chart. So and talking about them here doesn't make sense, but when you all of a sudden take that same thing and type in XLU on this chart, utilities make sense.
Mm-hmm. Because
look at the consolidation that's going on right now in utilities, the test of the lows, and if utilities starts to break back above this 36, 78, 80 level, now you've got to break out in utilities back to the upside. Now you can do the same thing. You can drill into utilities. You can find Duke, or you can find all the utility companies, NextEra Energy, the companies that are going to do well within that sector that you want to own. And that is the dynamics of this, is that you can stay at the ETF level or you can dig down further into this. But going back to this, one other thing I wanted to look at is other pivot points. And one big pivot point that I want to emphasize with this, and it's one that we adjust these. We never lose a pivot point. And the meaning of that is that everybody's now, it's amazing how the further you get away from a pivot point in the market, everybody knows the date, which is June 4th, which is the pivot point for this current trend to the upside. That was the previous low. And what we want to do is we still track this because we want to look at, is the leadership rotating out of that June 4th low, which is right there. And what you see is that financials and the blue line, which is telecom, have been the dominant leaders along with energy. And when you look at the end chart, they're all still there. Even though energy took that big ding to the downside on this chart on the day that we're recording this, you can still see it. But other things are starting to show up. You're seeing a breakdown in IYZ. You see the breakdown there in financials, which is now starting to reverse a little bit. And we've also had a breakdown in energy well before this. And note that each of them had different climax days. They weren't all on the same day. And that's what continuing your pivot point forward of all of these incremental points is that you keep getting, these are now longer term trades that have been in play because they still have never broken down.
And with the custom date sort tool that we're going to talk about practically how to implement it, you can literally start from every one of those pivot points, build a column, and track it from that point on. So you know from any one of those, you can sort it with a click, and you can know from any one of those pivot points what stocks or what sectors are accelerating, which are leading. It's very simple to do, and we'll show that technique in a bit.
And that's where, each time you have a pullback, like you can see right in here with the S&P, you got one there, you've got one here, you got one here. So every low point, it creates a new starting pivot point, and it gives you a new time interval. The same is true with the highs. You can go off of the high pivot points for shorts, which people are always saying, well, how do you find shorts? Well, generally they're off a high.
Yeah.
I mean, I find those to be the most effective anyway. But you can pick your pivot points of where the market is moving and how it's moving. The other thing that I like is to look at these. You can see where you've got about 1, 2, 3, 4 days in here where the market goes flat. You got another couple, 3 days in here where the market goes flat. And sometimes these flat points are great channel finders,
Yeah.
for lack of better terminology there, but you can find channels that break out. So the key to me is that you're always looking at, whether it's technical or fundamental data, you're looking at where is the market going. So your scans become real to you.
Right.
And that to me is really one of the most dynamic things of this. And the more I play with this, the more things I find to do with it.
Well, part of what I love about the different reversal points that you're talking about is if I do my custom date source from each one of those and I see consistency, for instance, in financials, and is it still leading, that sustains the trend. So I can see if those things begin to fade and I begin to see new leadership from certain pivot points, and some of the expected leaders that would continue this trend start falling off, the bells and whistles start going off that, hey, something's changing, rotation is happening, things are falling out of favor, and therefore this trend could be up. So you get great warning signs for tops and bottoms that way.
Exactly. And if you go back to this chart over here, this is the other thing that, every now and then a light goes off in my head and I go, wow, that's pretty cool. Mm-hmm. This scrolls back too. And I can take this same tool and I can put this on June 4th. Mm-hmm. And then I can actually, when I'm looking at the sectors over here, and if I've done a custom date sort from that date, it's going to show me the sectors in order. And I'm now looking at a bar chart. I could be looking at a candle chart from the same point, except now I've pulled out the leadership and said, all right, of those, we were talking about financials being one of those leaders from that June 4th low. And you can see that the trend has been very consistent. Mm-hmm. Other than this acceleration away from the trend line, which I have drawn down here in blue, when we accelerate, and this is just common knowledge, is that when the further you accelerate away from a trend line, the more dangerous the high is. Yeah. Mm-hmm. And that means that when you got those two climax runs on XLF there, you might want to tighten your stops and or look for whatever type of trading you like to do. And the same was true with healthcare. You can see the consistency of the trend. Mm-hmm. So you can actually take what's on the scatter graph and use the same desktop to create individual charts.
Yeah.
And then if you want to get even crazier, I know this is just crazy, is you can type in financials and you can go down to the Spiders financial sector, click on that. Now I just created the watch list of all those holdings, which, what are there? 60?
Yep.
And I can do the same thing. 80? Mm-hmm. Wow. And I want to just do real quick. You can do the same if we wanted to create that custom date sort with the June 4th time frame, pop it in here, and we'll come back and do this. Then it would sort this same, all the sub components with the same time frame. So everything gets synchronized. And now you're not looking at a lemon and an orange and trying to make a cherry, which to me never has made sense about trading, how people scan. They scan one way and they enter the trade a different way.
Yeah.
Create symmetry to your trading, and your trading is going to get a lot cleaner.
And by the way, you probably haven't seen this shortcut yet, but I'll show it to folks. This little shortcut that you may not know exists, if you look at the symbol at the top of your chart, right next to it is a little watch list symbol. Click on that, and there's that watch list that you were looking at. So anytime folks are on a sector-type vehicle like the XLV, you can very quickly get to the components of that particular symbol very quickly. So whether it's financials or anything else, you just go right there next to your symbol. And it's, I know, we just keep doing that stuff for you, man.
I know, I like that. All right, so not to beat the scanning part down, but we'll let's take a break, and then we'll come back, and we're going to talk in the next segment about how to kind of put this into motion with building your watch list and then putting the trades in motion.